rally. Our next guest expects the equity markets to remain strong as we wind up 2014. Joining us now, the executive director of the Fox Group, Trent Wagner. He joins us from Chicago. Trent, good to have you with us again.
Thanks for having me, Michael.
You've got, what, a 2,100 target on the S&P 500, and we've just gone through 2 days, the best you guys have seen since, what, 2011. And we're almost there already.
Yeah, we are. And, just for interest of full disclosure, the 2,100, we're on record as saying that before these last 2 days. So that's not something that we've amended after the price movement here. It certainly is. I mean, you said it best when we came in, Michael. It's a Fed-fueled rally. Obviously, the U.S. equity markets really liked what they heard yesterday from Janet Yellen. I think, her press conference clarified a couple of items that the statement itself was a little murky on as far as the new language for the forward guidance. She essentially came in the press conference and gave the most definitive timetable yet for the rate hike, which wasn't when they're going to raise rates, but when they're not, which is going to be the next few Fed meetings. That takes us into at least the second quarter of next year. So I think the markets like that. I think the Fed's stance on oil and Yellen having to take that, when it all washes out, net positive for the economy and the strength of the economy coming from consumer spending and growth as a result of people having more money in their pocket. I think the combination of those two items yesterday really fueled this last 2-day rally.
It sounds like that's why we've got this decoupling between stocks and crude oil itself.
Yeah, and we had seen crude oil, obviously sell off. We're down about 40% since the end of September. So through the fourth quarter of this year in crude oil. The first leg of that, Michael, we saw strength in the equity markets, and then I think the pace at which it sold off, when we went through $60, after 7 days, we had just gone through $70. I think people got a little scared. And, what we saw today, we did have crude oil down again. So we had a crude oil rally yesterday. Crude oil was down again today about 2%, and we had the equity markets rallying. So I think that speaks directly to the fact that the Fed clarified their position on cheap oil, and I think you saw what it did as far as the market movement today.
I can't imagine, though, you want to bottom fish in the oil market at this point in the game. Where do you do in 2015?
As far as oil is concerned, Michael, I could not agree with you more. I mean, if you try to bottom feed in oil, I would suggest, some sort of an options play where you can define the risk up front. But, until it shows some real strength, I would be a seller of any bounces in oil. Moving into 2015, as far as opportunities, we like the stock market still. The long U.S. dollar, short yen trade, it's come a long way. I think there's still substantial room for that trade. Yeah, you take a look at Japan. I think the Bank of Japan is going to have to get even more accommodative in 2015. I just don't know if there's another move for them. We wrapped up our QE program here in October. It looks like we'll probably have a rate hike at some time. It might be late next year. Even if we don't get a rate hike, the fact that we're wrapping up our QE here, we have major central banks around the world ready to implement fresh rounds of QE. I think you're going to continue to see the strong dollar narrative, and with specificity to the yen, I think we could see a 150 U.S. dollar yen handle by the middle of next year.
Okay, so that's your currency trade. What about equities-wise? I can imagine it might be tough to be investing in, your blue-chip American companies that are going to have to repatriate all of those profits at higher U.S. dollar levels. Yeah,
we don't commentate on individual stocks, but I would say from a standpoint of the overall U.S. equity market, you take a look at the NASDAQ's performance this year versus the S&P and the Dow. It's outperformed for the last couple of years on a percentage basis. I still think tech is going to have a lot of upside. And until the bull rally is over, and I don't think we're going to see it end in 2015, I think you're going to continue to see, even though we've come a long way in tech, I think the NASDAQ, as far as an overall broad-based index, has the most upside as we move into 2015.
The geeks shall inherit the earth. Trent, thank you so much.
Thank you, Michael.
Trent Wagner is the executive director of the Fox Group. He joined us from Chicago.